coming to you, Aditya, you picked out Bajaj Finance for us. Now, Bajaj stocks are in focus today, of course, with the Bajaj Housing Finance IPO that has kick-started today. But for Bajaj Finance, in the last couple of weeks, in fact, mid-August to now, it has rallied some 10-odd%. It has picked up steam. Tell us, what are you seeing on the charts for this?
Good afternoon. Thanks for the show. Clearly, Ankita, I think both the Bajaj shares, the Bajaj Twins, Bajaj Finance and Bajaj Finserv, they look phenomenally well on the chart. And it's been some time that both these stocks haven't been performing. It's been a long consolidation for both these stocks. Specifically talking about Bajaj Finance, it's on the verge of a breakout from an ascending triangle pattern. And this pattern has been going on for some time now. A sustained trade above 7400, 7450 now will trigger a massive breakout in the stock and can take it higher, closer to about at least 7800, about 8100 on the upside. So I see a decent and a big upside coming in Bajaj Finance, even from current levels. If one has to initiate a fresh long position, I think one can definitely look at adding Bajaj Finance in the portfolio. I'm preempting a breakout here, looking at the chart setup and the technical indicators, the RSI and the moving averages. I think all are suggesting that the big breakout is on cards. So above 7400, 7440, Bajaj Finance will give a big breakout for a target of 7800, about 8100 in the near term.
Aditya, let's keep it going with the FMCG pack because you picked out Dabur for us on the technicals. And I'm a little surprised looking at this chart because even if I pull up a very long-term chart, last 5 years, this stock has not even given 50% returns in 5 years. But seems like it's getting its act together. It's moving higher as of now. Last 1 month, the stock was up around 6%. So tell us, do you think now would still be a good time to enter? Are you seeing some upside over here?
Oh, definitely, Sneh. I think, as you mentioned, now the stock is getting up for a outperformance or maybe cover up the underperformance that it had done in comparison to its peers. It's broken out from an ascending triangle pattern after a long consolidation phase, and it's backed by healthy volumes. The breakout is backed by healthy volumes as well. So I believe once the stock sustains above 660, it can easily test levels of around 700 to about 760 on the upside. It will take some time for the stock to reach 760, but I think there is easily a 100-point up move on the stock from current levels. On the downside, 650, 640 are key support areas. So the risk to reward is also in favor of going long at current levels. If the stock is just below 640, one can look at 760 as the probable target with the 700 as an immediate target. And again, if I take a look at the RSI, which has just moved into the bull territory above the 60 level, it's a confirmation that the uptrend in Dabur is here to stay, and you can see much higher levels in the coming trading sessions.
Aditya, Britannia, once again, you've also picked that out. Seems like FMCG is also a sector that's on your radar today. So tell us, what's the view here? What are the levels you're spotting?
Absolutely, Sneh. In the dull market, FMCG is outperforming. Usually that's the case. And definitely Britannia also looks very interesting. Taking it ahead from where Ansh left, yes, there's a breakout on cards as far as Britannia is concerned from a downward sloping trend line. The neckline is placed at 59.40 to about 59.50, just about 15-20 rupee away from current levels. Once it breaks out successfully from that trend line, I think a stock can easily test much higher levels of at least 6,300 on the upside. On the downside, 5850, 5800 is a good support area. What is interesting is RSI has started to move higher and started making higher highs, higher lows. So that suggests that the up move in Britannia is likely to continue, and you can easily see levels of around 62, 6300 in the coming trading sessions.
If you like this video, then like, share and subscribe to ET Now.